In the metals quadrant, taking a look at the March copper futures contract, which closes lower for a second consecutive session. But today it happens with an outside range, which technically means that the market attempted to move in both directions with exaggerated moves, with a higher high versus yesterday and a lower low versus yesterday. But the lower close that we got today implies that the weakness in copper prevailed. Today's high was a jump over the 200-day moving average, but it was not sustained. The high today, 4.3350, that was plus 16.8%. The low today, 4.2175, that was down 1.08%. And with a little bit of time left in the session, we're still down about 2/3 of 1%. The dollar, which has a typical inverse correlation with copper, strengthened for a fifth consecutive session with its strongest performance against the Swiss franc and the British pound. Now, despite being slightly lower against the yen and the euro, oddly enough, after an ECB rate cut today, in the aggregate, the dollar was stronger, putting pressure on commodities, including copper. And again, it's for the fifth consecutive session, so we might be starting to get a crack in these commodities. We also have trade fears making their way through the market despite a Fed rate cut of 25 basis points, which is almost a certainty at this point next week at their meeting, with the CME Fed Watch tool placing the probability for that December 8th meeting of a 25 basis point rate cut at 98.4% as of today. Fears of a trade war, especially between the US and China, continue to dominate the headlines, given China's status as a huge consumer of copper. I have copper down 11.4% from its 2024 highs. We likely won't know until the first 20 days or so of President-elect Trump's administration whether an aggressive tariff-based trade war is in the future or not. The president-elect seems to have extended an olive branch by inviting Chinese President Xi Jinping to attend the inauguration. We'll see if he accepts the invitation or not.